Hey everyone, welcome back to Corporate Dakota, the place where we spill the tea on big corporate moves. And guess what? Today we're diving into a behind the scenes deal involving CCS Portfolio Holdings, LLC, and a very familiar name in the banking world, Goldman Sachs, Bank USA. Stick around as we decode this financial maneuver that is getting a serious facelift. And before we get into the nitty gritty, if you love getting the real scoop on corporate filings, make sure you are subscribed. Also, we have a fantastic Discord community linked down below where we chat about all things finance. So what exactly is going on here? CCS X Portfolio Holdings LLC, which we'll just call the company for short, has inked an amended and restated repurchase facility terms and conditions. Now that sounds like a mouthful, but think of it like this: they've updated a crucial borrowing agreement. This isn't just a minor tweak though, it is a significant overhaul. They've basically renegotiated a deal that allows them to borrow money using their assets as collateral, a common practice, especially for investment firms. This agreement is with Goldman Sachs Bank USA, and the key takeaway is that the company is now able to access a larger pool of funds, and for a longer period. Imagine you have a credit line with your bank. Well, this is a much bigger version of that for a company, and it has been supercharged. Let's break down what changed. First off, the total amount the company can borrow or the facility commitment cap has gone up from $500 million to a whopping $750 million. That is an increase of $250 million. Think of it as their shopping limit just got a lot bigger. This tells us the company likely needs more capital for its investments or operations. With this larger borrowing capacity, they can take on bigger projects or weather unexpected financial storms more comfortably. It suggests a strong underlying confidence from Goldman Sachs Bank USA in the company's ability to manage and repay these increased obligations. Now, with that bigger borrowing limit comes a slight increase in the fee they pay for having that line of credit available. It is nudged up from 0.10% to 0.13% of the total commitment cap. While it seems small, this also means the company is willing to pay a bit more to have access to that larger sum, which reinforces the idea that they need that extra financial muscle. Perhaps one of the most important changes is the extension of the maturity date. This is the date by which the borrowed money needs to be repaid. It was set to mature in March of 2026, and now it has been pushed all the way to January 2027. This gives the company almost an extra year to operate with these funds and to plan their repayment strategy. It is a clear signal that both parties anticipate a longer-term need for this facility and are comfortable extending the runway. So what does this all mean for CCS IX Portfolio Holdings LLC? They are clearly in a growth or expansion phase. By securing a larger and longer term financing facility, they are signaling ambition. This could mean they are looking to acquire more assets, deploy more capital into existing investments, or perhaps prepare for a future event like a merger or a significant restructuring. It's a proactive financial move that sets them up for greater flexibility. Now, while this filing doesn't contain a full financial statement, it does point us to the actual document that holds all the details, the amended and restated repurchase facility terms and conditions itself. This is where the true substance of this deal lies, and it is filed as an exhibit, so anyone can look at the precise language and terms. From a bigger picture perspective, this updated agreement with Goldman Sachs Bank USA shows that the company is strategically managing its financial resources. It is not just about having money, it is about having the right kind of money available at the right time and on favorable terms. The increase in the facility cap and the extended maturity date indicate a robust relationship between CCS IX Portfolio Holdings LLC and a major financial institution like Goldman Sachs Bank USA. Looking at this from a Warren Buffett perspective, it suggests the company is playing the long game. They are securing the necessary fuel for their engine and are not afraid to commit to a longer duration. The slight increase in fees is likely a minor cost for the significant increase in available capital and the relaxed repayment timeline. It shows a good understanding of financial leverage and its importance in achieving strategic objectives. What we see here is a company that understands the importance of strong banking relationships and well-structured financing. They are not afraid to increase their debt obligations when it supports a clear strategic direction, which in this case appears to be growth and expansion. The risk here is always that if their underlying investments don't perform as expected, they could face challenges repaying this larger debt, but the extended maturity date offers some breathing room. The opportunity is immense though. They now have the financial power to pursue opportunities that were previously out of reach. Overall, CCS IX Portfolio Holdings LLC is demonstrating financial maturity and strategic foresight. They are proactively positioning themselves to capitalize on future opportunities by strengthening their financial foundation. They took a good deal and made it better for their future needs. Alright, that is our breakdown of this interesting 8K filing. What are your thoughts on this upgraded financing deal? Do you think it signals aggressive growth or prudent financial planning? Let us know in the comments below. If you found this deep dive valuable, please hit that like button and subscribe for more corporate insights. And don't forget to join our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you in the next one.